So I don't know how much of all of you know about Matrix, but maybe Avnish, you could sort of start a little, giving a little bit of background with respect to when after you exited your previous venture, why did you end up starting a VC or end up becoming a VC as such?
Yeah, sure. Thank you, Revant, and thank you to Subho, Gaurav, and the IMI team. It's actually great to be here, given we were involved way back in 2003-4 setting up IMI. So why VC? I think I was tired of being an entrepreneur, but I enjoyed interacting with entrepreneurs, and this was the best platform to do that. I realized over a period of time that this platform gives you something that operating a company doesn't, which is to be able to every day look at a different problem and interact with a different person and founders especially. And that was very stimulating. At the time versus today, at that time, how big this organization would become, how big digital will become, was not very obvious because it was too early in the market. But today it's obviously great. Also, Subha was just telling me, he's the president of IMI, how much this organization has scaled, and that scaled because digital has scaled.
Amazing, amazing. I think most successful venture capitalists have always played the long game. And I think you did something similar. And this was way back in 2006. Is that correct?
Yeah.
Yeah. And I think that was the inflection point of, let's say, venture capital in India, right? In some sense, there was NEA, Indo-US.
Did you say inception or inflection?
Inception.
Yes.
Yeah.
It was an inflection. Most of those firms went out of business. A lot of those firms went out of business.
Yeah. So you had a lot of new VCs setting up shop, yours included. And I think that sort of fund one for everybody, which was 2006-7 vintage. Most people saw exits happening over the next 10, 12, 14, 15 years. And if you look at the second cycle of 2008-9 post the financial crisis, or maybe the funds of vintage 2011-12, fundamentally we are seeing, if you look at venture in the US, it's a clear 10-year cycle. People look at getting a 25, 30% IRR out of venture capital funds. But if you look at India, it's at least the data points to the fact that these are more 15-year cycles. Now, this is historical data. And that's part of the reason we're here today. The topic is more about trying to understand how does the venture market work, and which is related to how the Indian digital economy has shaped up as well. And we've largely been talking always about the fact that India would be the next China. So there are multiple things that we have seen in the last 15 years. Would love to get your thoughts on each of these.
Yeah. So first of all, 2006 should not be used as a benchmark. I think everybody screwed up. Everybody started too early. Today, we would not be here without that because this is a reputation compounding business, and for most of us, that is working well. But the vintage of that fund cycle is poor, and the returns are poor, but that should not be used as a benchmark. The 2011-12, which was 10-11-12, was the next vintage. Actually, you would be surprised. We were running some numbers. The good funds have done a dollar IRR still off, and this is net of pretty expensive fees and carry. And if you were to gross it up, dollar IRR of 25+%, net IRR of 20%, rupee IRR of 30+%. Now, if you believe that the macroeconomic has changed where the rupee won't depreciate as much, we checked our average rupee investment exchange rate was 42. Today it's almost double. If you believe and even the first fund vintage at a gross level for us is 3x in rupee. So I actually think what one has to separate what alpha you're generating in your business and in your investing versus the beta that is getting generated on you because of change in context and all of that. So I think it's actually a pretty compelling asset class. In terms of exit cycles, I don't think you have to be prepared for 15 years. I think if that is the case, then the market is not very attractive, even though you can compound. So this kind of IRR over a very long period of time is very hard to generate. So it's very hard to find asset classes where you get that. But even with that, I would say you should not be ready for a 15-year because things have changed dramatically on the ground. If you look at, everybody now talks about, I just read this morning that the finance minister said, next phase will focus on 4 factors of production: land, labor, capital, next phase of reforms if they come back, land, labor, capital, and DPI. This digital public infrastructure in India is very unique. What used to be a liability for us in terms of infrastructure has become an asset. And I think that's a big game changer. And we were looking at, the stages of interventions, starting with UPI, demonetization, which has been very good for digital businesses, GST, UPI 2.0, so on and so forth. It has now all compounded. So our 2011 vintage companies went, 2011 fund vintage, let's say we invested in 13, 14, 15, went almost nowhere till 2019 and then grew 20, 30, 40x. And now our 2018 fund vintage are already growing at that. And one of them has filed to go public, is well known, Ola Electric, and hopefully will list in April. 5-year, start to finish. So we did an analysis and we saw that the average time to go public, median time to go public has gone down from 11.2 years to 7.2 years. So I actually think the market has deepened. All of us started too early and maybe sometimes are too jaded. And so I think that inflection has happened in the market. Now there will be some sectors where you have to take a very long-term view. I would say semiconductors, advanced manufacturing, some things in climate, those kind of, so it will be sector specific. But there are a bunch of other markets that have inflected and I think they will surprise on the upside. There was a report you may have seen, urban versus rural consumption, Goldman Sachs report on affluence. So I think when a country is going through the increase of GDP per capita, when you're in this curve, you don't know you're in this curve. It's only when you reach here that you realize how much you have come, right? I think we're in that phase.
No, amazing. I think whenever I speak to you, it's always refreshing how optimistic you always are. It's a very, very good thing. Most investors that I think founders end up spending time with are always focused more on what could go wrong. I think you are one of those, helps being an ex-entrepreneur who's built a business and exited in that sense. But because you brought up GDP per capita, I think there's too much debate around this still, right? Like with the fact that where are we really? Are we at 2,500, 3,000, 4,000? When do we get to that inflection? And I like that point that when you're in the curve, it's very hard to really know that you're in that curve. We are obviously seeing spectacular interest in the Indian stock market. We keep trading at all-time highs in that sense. But fundamentally, we are still very, very far away from that $10,000 that, let's say, China is at, or a $75,000 that the US is at. And specifically, because our GDP is so consumption-focused, do we feel that with the amount of capital now being invested in India, while the opportunities exist, is the capital chasing those opportunities a lot more than what should be there?
Yeah. So I think just on this GDP per capita point, so we actually have, in one of our analysis, we have a chart that shows China going from 2,500 or 2,700 to 5,500 in 6 years. We are projected to do that in 10 years. Look at where China is stuck now. I think slower is better because in that phase you overinvest. Now to answer your own, if you do the math, your GDP per capita is doubling, but you have 60+% of your economy on consumption versus a China that had 40+%. So you are going to get a 1.5 multiplier on that in just consumption spending. I think things are going to explode and people don't even realize. And some of the things that you see playing out, Mercedes, BMW, all these car sales, they are growing at 25, 30% off larger bases every year. SIP accounts are at highest levels ever. Now, I have a problem with that because if you look at BSE 500, it has not lost money on an annual basis for last 8 years. So all these investors are chasing market tops and they have not lost money yet. When they lose money is when we will really know how much equity penetration has happened. And it needs to happen to take out the excesses. But I think it's very real. And even a lot of other things people say against India for China, saying our growth is very top 1% led. our middle class is not expanding as much. Actually, none of them are true if you look at the data. We have also mapped their income pyramid versus our income pyramid, and it's just, we are 13 years behind. But their best 13 years were from 2007, 8 to 20. We are in third year of our best 13 years, or fourth year of our best 13 years. Or I think it will go even longer, it depends on how some of the other things play out. So I think it's very real. I think the trajectory is going to be similar. But if everybody believed that, then people like me would have no opportunity to invest, right? So that's one thing. In terms of capital chasing, I don't think so. I think the hot money is gone. The correction of 22 and 23 was very good, and you well know it's continuing. I was just chatting with somebody who's very well known in the public markets, and I said, markets are still crazy. He said, yeah, irrational, but not exuberant. So he said, it's irrational valuations, but discerning, which means that people are picking. Now, I still think Indian markets are in a bubble, but it's not what went. Everybody knows this, right? ZERP, which is zero interest rate policies and all that. That era is gone for permanently. And I think that created a lot of excesses. But going forward, on a stable foundation that we have, I'm obviously very optimistic.
No, that's amazing. I think what maybe the audience would love to hear from you, because you've been in this industry now for 18 years?
16. Yeah.
16, yeah.
18 years.
18,
right?
yeah.
I lost
What do you see changing? So you've spoken about the digital infrastructure that's really helping us and our economy grow. You're seeing companies scaling faster. And you are also seeing maybe different styles of approaching these markets from founders who are operating in these different eras.
Yeah. Very different founders. Very different founders. So, I mean, including people like, if you look at 2006, 7, 8, Flipkart got started, Snapdeal, however that journey went, very talented founder, young 20-somethings coming out of IITs, going out to change the world, being too early in the market, but resilient. Then you saw the second phase. So those were the times, Sachin Bini. Then you saw the Ola, the Bhavish's, and the second phase come out. Swiggy, Zomato. All these people were inspired by the first. But they were all, again, first-time founders. Now, a bunch of those are still coming, but what is happening now is people like you with your background coming as an experienced founder. It's a very different approach to business. It's a slower, surer, more thoughtful. It's almost India versus China, right? And I think more sustainable. So what I feel the most excited about, and by the way, even after the bubble burst, two of our most active years in the last 6 years in investing were last year and the year before. And most of them were experienced founders. And if you're an experienced founder, you actually want to start in a downturn, because your competition, you'll have an edge, and your edge doesn't play out when the market is awash in capital. You can't hire the best people because somebody else is paying more. You can't raise the best capital because, there are 10. So the experienced founders actually come out in downturns. And to me, that's I don't want to be so optimistic, but I am, which is, it's a great combination of a deepening market and experienced founders. What else has changed? For the first time, we have digital IPOs. I think Dipinder did a great job by opening the market and going public in 21. Some of them have done well, some of them have not done well. All the ones who focus their business models on profitability have actually done well. And I think people are looking at that. Bhavish is taking his company public. Ola Electric, hopefully in a month or two. Swiggy is supposed to go public. FirstCry is supposed to go public. I mean, this is a once-in-a-generation thing that happens in a country when a completely new set of assets get monetized, right? So in 2000 to 2010, 12, it was infrastructure sector. Before that, at some stage, it was the IT services sector. That was the original. Then at some stage, it was the pharma sector. Then it was the banking sector. So this is a sector creation that is happening, right?
No, I think that's amazing to hear. But one aspect I keep hearing from a lot of young and experienced professionals who want to become an entrepreneur, they're like, yaar, sab kuch to ho gaya hai, right? You have your food delivery, you have your, or if they come up with an idea, they're like, yaar, I went to this investor, but they keep saying that this has been done, right? Or Swiggy will do this. Like what Google and Facebook will do this is now become Swiggy and Zomato will do this, right? Is it getting harder and harder to find consumption-led ideas? And is it time for entrepreneurs to also look at, okay, great, we are getting digitized, but are the revenue and profit pools globally also available to us sitting out of India? And maybe those are some opportunities that we should focus on.
So I think global will be an opportunity, but to me, that thought process that entrepreneurs, if they have, is limiting, because what you are then saying is a $4 trillion economy is going to go to 8, 10 trillion. A 5% digital penetration is going to go to 25%, but there are no businesses to be built, right? So we were actually doing a consumer sector thesis yesterday or day before. And there are so many ideas. Government has come up with new BIS norms so that toys cannot be imported from China. Create a great toys business. There is a big trend towards premiumization. I was wondering, for example, so many designers in India are very well known. It's very unique to India. Why is there no marketplace of just premium designers? Because a number of them have been created and failed, but that time was wrong, right? So there are so many ideas. You have to believe in the macro and say, if the macro happens, what all will take off? And you don't have to be too smart. Look at what took off in China. Luxury shopping in China is crazy, right? What took off, US is harder to compare, but I think China is a great comparison. So to me, premiumization, luxury opportunities, more vertically focused platforms where there is a right, what we like to call right to play and right to win. So in toys, there's a clear right to play and right to win because all the globals, Mattel, Hasbro, whatever, they have exited India. They say it's too small a market. All of our market got dumped on by China. Government has said, effectively using the BIS norms, no more Chinese toys. Kaun banayega? And if you can make it here, then you export, right? So I think there are number of such opportunities.
Well, that's amazing to hear. But some of these ideas may end up being a little bit old school in that sense, right? Like if someone wants to, let's take the toys example.
Yeah.
I figure out a way to manufacture toys in India and I'm building a nice niche brand and I start seeing some traction. Most founders also today, or most prospective founders today, worry if venture capitalists need that technology angle. Is that also changing today in VC, you think?
We don't necessarily need the technology angle, but we definitely need a differentiation and moat. So if you're just another factory making just another toy, I don't think that's very exciting. Somebody can invest in it, we wouldn't. We would say, what's your edge? So I'll tell you, India's edge, for example, is in STEM, science, technology, whatever, the math stuff. So one company that we know is succeeding because they focused on STEM, perfected all their toys on STEM and now are selling in the US, and that's a much higher AOV, right? So you must have an edge. Your edge could be design. We also met another company that is building remote control, radio control kind of stuff. China plus quality at same price because Chinese toys were known to break and stuff. Now, once they perfected it here, again, they can sell on Amazon and export, right? There has to be an edge and differentiation, that I agree. But I do believe there are ways of creating an edge and differentiation. I know in your business, you sell the best gummies in the country. And I have to give him a plug, Man Matters gummies and Bodywise gummies. And you went and backward integrated and that you created an edge. Otherwise, somebody could have come and copied.
Got it. No, I think that's a very helpful thought process. But apart from consumption, we've also seen a lot of success in enterprise SaaS in the last 10 years. And we've had large businesses built out focusing on the US market. There is a big worry that with the advent of AI, vertical SaaS could get disrupted. Do you see that entire segment opportunity changing drastically in the next venture cycle?
So I think 2-3 points. And I want to pick up one thread you said, verticals about SaaS from India. I think overall in India, and I feel lucky to be in that position, the canvas that a VC can play in is multiple generational life cycles in other markets combined into one. I can do consumer, I can do EV. No VC is in Tesla. We are in Ola Electric. We can do AI. We can do semiconductor chips. We can do SaaS. So it's just a good time to think about all this. Now, there are two elements to what you asked, which is, will AI disrupt SaaS? And second, SaaS founders going global. I think the latter trend is here. And these founders are smart enough to think through whether AI will disrupt SaaS. So they're all AI native. And if you look at the evolution of SaaS, finally it came down to, are you customer backwards, bespoke, and therefore vertical SaaS succeeded because they could cater to requirements of customers that horizontal couldn't, right? Now, same thing applies in AI. I think what will happen is the large companies may face revenue pressures, but the small companies actually is a better opportunity because they can price it lower and try to disrupt the large companies. But let me reverse the question to you. You have also been a VC before. You have seen the evolution of the opportunities. What do you see?
See, honestly, if you ask me, India's never been an easy market. I love your optimism. I think for me, the input is always the resilience, intent, hunger of the founders building out. Every cycle, what we see is there is a lot of, I would say, fly-by-night founders in that sense. Everyone wants to become a founder because suddenly in the media, there's a lot of funding. You know, Shark Tank TRPs are off the roof. Everybody aspires to like, yaar, mujhe bhi ye karna hai karke. And that usually happens in high funding cycles. So if you look at 2006-07, when the venture ecosystem started, it was a good time even for the public markets. The next cycle was 14-15. The day Flipkart raised their $1 billion round, from that point till 2015 November, we had, I think, a massive bubble of venture investments or growth venture capital coming in. And suddenly everybody was ready to leave their jobs and jump ship. And like we have seen the last 18 months of funding winter, it was the same in 16-17. Obviously, 20 second half, 21, 22, we again saw this spate where every one of my, I'm at the age of 40, for me to hear another 40-year-old saying that in spite of being the MD India of something, he's like dissatisfied because, you know, औकात तो entrepreneur के ही है, is something that's very weird to hear, right? Because they've had great careers. I think that cycle has changed again. I don't know how long it will sustain, but I think that's the bigger problem. I see that more and more now individuals, college graduates, 22-year-olds have that dream of becoming an entrepreneur, but they don't know why, right? And that's a bigger marker for me apart from funding, capital available, GDP per capita. Fundamentally, great businesses are built because someone thinks कि मुझे ये 20 साल करना है. वो intent clarity is disappearing more and more, or it's merging more with the LinkedIn or the YouTube gyan with actual intent to build something. And that worries me more than anything else, actually.
It's an interesting point. Again, it's the optimistic investor and the pessimistic founder. But I would say that's what happened in the US. How do you think Evan Spiegel started Snapchat? How do you think Mark Zuckerberg started? They were all college kids, right? College kids and young people need an inspiration. Now they have an inspiration. You are saying it's too, what is different versus the past, that it is very ADD driven inspiration, right? It's a very short attention span. YouTube, my son does all of this, right? So that I haven't thought through, but at least inspiration to hai. But grit and the understanding of what it takes to get there, that's not there.
Correct. I think what ends up happening is, if you go back just to the examples that you mentioned, right? Yes, the internet was there, but I think fundamentally they were not getting bombarded every day with some gyan that felt like कि मैं गधा हूँ, मैं क्या कर रहा हूँ, right? And I think that FOMO is just getting built a lot into the overall, at least if I look at today's 25-year-old, I worry about the mental health status because they always seem to think that either they're at one extreme, which is I am God's gift to earth, or I am, oh my God, what am I doing? I'm not an entrepreneur.
No, and that's, I think, a very interesting philosophical society level point that this generation, I don't know how many here are there, the people who are growing up with this overload, how does that play out for them? You know, like for example, in America, there was this whole baby boomer moment when in the 60s they went through this renaissance and all that, and that defined a generation. So maybe that's a
Yeah.
good point.
Yeah. So I think for me, that's the, I mean, because I also keep interviewing so many folks every day, this is one barrier that I'm just not able to cross कि इसको
Yeah.
solve कैसे किया जाए करें. Plus, even after they come into the company, it's a
You
challenge
can
to,
see that Revant is a tough boss, just FYI.